So Arun, high level here, what's your take on this earnings report? It seems like overall strong and investors are approving.
Yeah, no. Overall, I thought it was a terrific report. Really, you got the ingredients you needed for the stock to go up. One, you got the AWS beat, or AWS was in line, but most importantly, AWS growth accelerated to 19, a little bit over the 19%. We needed to see that acceleration, given that both Microsoft and Google saw accelerated growth. And then I think the real standout here is on the operating income line. We saw what was it? We saw about over $17.4 billion in operating income, and operating margins were 11%. That's the strongest operating margin going back, at least several years. And you really saw margin improvement in all three business segments. The North America business segment, which is mainly the retail business, saw margin improvement. The international business is now profitable, which is great. And even AWS, you saw margins in AWS accelerate to 38% from about 36% last quarter. So really, everything you really need for the stock to go up today.
Arun, there seemed to be some conversation, I know Microsoft pointed to this on their call, about spending on AI perhaps weighing on margins, right? It doesn't seem like we're seeing that, at least from this quarter with Amazon. I guess, why is that? How does the AI story sort of work with Amazon, where it might be different, maybe perhaps what they're spending on it, than it would be at other companies?
Yeah, great question. Yeah, I mean, all the hyperscalers are increasing their CapEx spend. Even this quarter for Amazon, it looks like they spent about $22 billion in CapEx this quarter, which is a pretty notable acceleration from Q2 and Q1. But yeah, you're right. When you're initially investing in AI and servers and chips, there's usually a margin headwind associated with that. I think what's unique with Amazon, there's a few unique things. One, Amazon's not solely reliant on chips from NVIDIA, for example. They also build and create their own AI chips that are more cost effective and of more value. So they may not be seeing the same type of capacity constraint issues that Microsoft is seeing at the moment. And then the other thing I would point out too is, Amazon has multiple levers to grow margins. So even in a given quarter, if in a given quarter AWS margins are down, then they can flex their e-commerce business and try to improve margins there. And we do believe that Amazon has significant margin potential in their retail business. It's still, the margins are still relatively low, about 5-ish% right now in that retail business, about 6% in that North America retail business. But I think over the next year or two, the margins will improve. There's a lot of efficiencies, I think, in that retail business. And lastly, I'll just point out, advertising. That's a very high margin business for Amazon, and advertising is growing faster than their core e-commerce business, and that bodes well for Amazon's overall margin profile.
So Arun, you sound very bullish on Amazon, but in your notes you did say that you're cautious that growth for its profit and free cash flow may not be linear. What are the biggest concerns there, and what could those possible headwinds mean for some of that growth and the stock in the longer term?
Yeah, no, we thought expectations for Amazon are always really high, and this quarter in particular, there were some unique, I think, headwinds to margins. Number one, their business called Project Kuiper, which is their satellite business. It's essentially a competitor to Elon Musk's Starlink business. But they're just starting to launch satellites into the sky, for example, and there's production costs associated with that, and we thought that would dent margins in the near term. Also, all the money they're spending in data centers and chips, that's typically a margin headwind over the near term. So we just wanted to warn investors that you probably won't see that gradual linear increase in margins, but at least this quarter, margins were much better than we expected. Like I said, 11% operating margins, are quite strong, especially given that a few years ago, Amazon was posting a loss, for a few quarters. So they've gone a long way from becoming unprofitable to now 11% operating margins and over $17 billion in operating income.
Strong margin story here for Amazon. Again, the stock is up nearly 5% in after-hours trading. Arun, thank you so much for your thoughts and for joining us today, along with Josh Schaefer. Appreciate you, as always, joining us.